Hey everybody, this is Jose Blasco. We are about to get started. Let's have a quick sound check. As always, a quick message on the chat box would tell me that you hear me well. So we are ready to get started. Plus, saying hello is a nice thing to do, and is very friendly to the community, isn't it? So let's have a quick hello on the chat box. I'll put myself in the bottom right side of the corner so I can say hello. How are you, Siderman, Maka, Clive? Good to see you all, everybody. Very good. So we are 10 seconds away from starting our session. 3 seconds away. Almost ready. Here we go. Top of the hour, everyone. Welcome to the session, everybody. This is Options with Options. My name is Jose Blasco. This is September 30, 2021. And we are ready to trade options. Before we get started, I would like to highlight the disclaimer on the upper left side of the screen. So please read it carefully. Disclaimers are important information indeed. Do not skip it. Read it all. I am counting on you. Thank you so much, guys. Some of you may know it by heart, but again, it's always relevant and important to read. Agenda for today, we're going to be looking at the current market environment. We'll look at trade review and trade management. We'll try to really run through this today because yesterday we spent basically the whole session talking about trade management, which was needed, but we also need to take some trades, isn't it? So hopefully I'll find as much time as possible to prepare new opportunities and execute them and put that in those accounts, okay? Christian, how are you, my friend, as well? Good to see you. Good to see everybody. So let's begin. Let's begin with our market analysis to understand where we're at with the S&P. So where are we at? So again, this is day 2 of a down climate, okay? Based on statistics, the climate should last for 2 days. So far, nothing to be too concerned about. Also remember what we said yesterday, we had an Elliott wave turning point identified here with a target located here around 430, 420 something. So we may have a little bit of an extra push to the downside, making those 2 dots to meet 3, maybe 4, something like that. But if we were to rely on probabilities, which we should, and we were to look at the markets from a statistical point of view, which we should, we would very easily anticipate that a few days from now we're probably back into a blue climate. Okay, this is what should be seen in the following days to come. Okay, in any case, there is concern out there. Okay, there is concern out there. Some people are a bit in the fearful side. So if you look at VIX, the VIX is trading at 22 point something today. Okay, 22 point something today. If I go back to the S&P, notice how, of course, the implied volatility is going higher, right? Compared to yesterday, we got a little bit of an extra, increase on implied volatility, which is basically what the VIX showed us. But then when you look at the implied volatility of the calls and the puts separately, you can see that, while the markets are going down, there is more volume hitting the call side versus the put side, or assuming those are buy orders. If they are sell orders, then there are more hits on the put side, bringing the implied volatility of the puts lower than the implied volatility of the calls, which is higher. And that is a bullish sentiment building up from behind the scenes, as we have discussed in multiple sessions in the past. So again, all of this reinforces the fact that, probably that red climate, it's likely going to change to blue soon, okay? Notice when we had this very extended red climate, it was not the case. The implied volatility of the puts was above the implied volatility of the calls, and only when we had the crossover, okay, where the call started winning the put side here, this is when basically this red climate started dying off and then became blue, okay? Even though, I guess it was not strong enough to become confirmed because it was thin dots, okay? But you can see the importance of reading the implied volatility for calls and puts separately in this sense. Ahmed, how are you, my friend? I see you are with us. Welcome to the session. Cool. So with all of this in mind, basically, I am concluding the same thing I was concluding yesterday, that, the moment I start planning trades, I'm going to go for iron condors, selling premium. That's going to be my choice. And we're going to be doing that. But before, we need to go ahead and review trades. So I'm going to be looking at positions, okay? Yesterday, we ended up with a pretty complex position on Intel, where we took this long call that was left, and we converted that into an iron butterfly. So switching from a directional trade to a non-directional, because it was now statistically unlikely that we were going to reach the target. Okay, so we did that. If we were to look at the behavior of this trade in the account, so basically this account is, P&L for the day is 0.5. So basically we are at the same place where we were yesterday. And why is that? Well, if we look at Intel, it's 0.13% up, so which is basically where it was yesterday. It's kind of the same. So the stock hasn't moved so much. Therefore, the impact of what we did yesterday is minor. Time decay has not happened too much yet. This expiration day was October 15. So we just need to do one thing there, which is to wait. Okay, I don't have anything else to add to Intel unless you have questions. Okay, another trade for us to examine is ADM. Okay, ADM, which if you recall, how are you, Joanne? I just saw that you typed there on the chat box. Good morning. So ADM is another trade that we have in our account, where we entered this trade as a hedge. Okay, you guys probably remember that, right? So if I look at ADM, we talked about the fact that this trade has been a little bit of a teaser, right? So, going up, almost reach our target, but didn't, then fall down very hard, didn't reach our target below, then up again, didn't reach our target above again, and just up and down, and really going nowhere. It's actually, if you look at it properly, it's a proper sideways market, like from a, like it's a book example of a sideways market where it should have been a down market, because this was a weak stock in a weak industry. Okay, and it's not behaving like that. So this trade is not really helping. Okay, so good thing that we hedged by using shares. So if you look at ADM here, okay, you can see that we have long 33 shares against the put spread. Okay, so in that sense, we are currently with a negative P&L of 47, but instead of being exposed to a risk of 100 plus, so then the risk of the trades is much less. And because of the positive gamma, if the stock was really to move, and it doesn't matter if it's up or down, but if the stock was really going to provide a move, then we would end up breaking even or making a profit on the trade. So again, we are still waiting for this to happen. There is nothing to be done on ADM. The only thing which is, starting to get a little bit problematic, quotes problematic, is that October 15 is approaching, and therefore we may end up taking the loss that this trade implies, which is again much less than the loss we were ready to take when we entered the trade before we used 33 shares against this trade. Okay, so that's why I said, problematic quotes, right? Because it's not really a problem, but of course we would like to see a big move to happen before October 15. That would be very nice. Okay, so we are still, waiting for this to happen. Nothing else to add when it comes to ADM. What else do we have? We have Colgate-Palmolive. Okay, Colgate-Palmolive, and this one is also a stock that is showing a little bit of loss. Okay, so let's examine this a bit closer. Okay, let's examine this a bit closer. So Colgate-Palmolive, I believe we planned this one using a 2-minute time frame. Yeah, exactly. So, when we planned this trade, there was a speed bump there. There were UFOs, and basically we planned the trade, out of this speed bump, expecting the price to go higher. And it's just been kind of like teasing us a little bit, come in, started going up, looks nice, come back in, starts going out, looks nice, come back in, very strong push actually on the past 1 day or two with Colgate-Palmolive, and then back in again. So what a teaser. But again, this area represents a potentially strong, relevant turning point. So we may end up seeing the turning point, and then everything will change in this trade, where now we're gonna be able to start seeing some P&L. This trade is made of, if I was to, not Pfizer, CL. So if I was to open a risk graph, so as you can see here, this trade is made of using 2 bull put spreads, okay, and buying 1 call, okay, which is basically paid with a premium collected from the 2 bull put spreads, okay. So the bad news is that the stock is not moving our way, but the good news is that while the stock is not moving our way, there is time decay that is helping the bull put spread And there may be a time, even though now the 77 put is slightly in the money, so now it's not really helping. But if the stock was to just push just a little bit, with all the time that has passed, you should be able to close this put spread at the same cost of the call. In that sense, you will now be left with a call like the one we had with Intel, which is a call with no risk. Okay, and again, that is very desirable, and we are waiting for this to happen, which is taking more time because the S&P has been dropping hard, especially when the climate, went for many red dots, where statistics suggested only two. So in that sense, this is really impacting negatively Colgate-Palmolive. Okay, what about Pfizer? Okay, so again, it's patience. Okay, it's a patience game right now for Colgate-Palmolive. What about Pfizer? So if you remember with Pfizer, we had a very similar setup. Yeah, it was here. Okay, and let me zoom in this one a bit more. So we entered this trade on that particular day. I got this vertical line here. You see that, right? So on that particular day, we entered the trade, knowing that below price there was a speed bump, and there was some UFO, which is now gone. But there was some sorry, I didn't draw this right. There was some UFO somewhere here. Okay, when we were planning on this trade. So sure enough, price came to the speed bump and started bouncing. Okay, and that's the beauty. Now, of course, what's not so beautiful is the fact that when we entered this trade, we were outside the speed bump and outside the UFO. So then there was a chance for price to come down, which, if you recall, we tried to mitigate with the settings on the matrix when looking for the opportunity, where we looked at a very extreme climate, we look at a series of things that would minimize the probability for the stock to fall, and therefore we were using that speed bump as a backup plan. Okay, but what happened? Well, what happened is that a few days ago, and if we go back to the S&P, we had this major down day on the S&P, and that of course pushed Pfizer to reach that speed bump. Okay, so it's all good. Okay, we planned the trade that way. It's all good, of course, because the stock is trading basically at the same price when we entered, or maybe a little lower. So when you look at the P&L for Pfizer, it shows as negative 35.5. So again, it's the same as Intel and Colgate-Palmolive. We are now playing that waiting game, okay, for this to turn and begin moving. Okay, so patience is indeed very important in the life of a trader. Okay, and even though it may be challenging, it is indeed important to be patient when it's time to be patient. Okay, so with those trades, that's exactly where we are. The next one I would like to review is WHR, Whirlpool, which that particular trade was taken by me, but I believe no one else took it. And while it was not a brilliant trade, the beauty is that in the end, it did work. Okay, so this was an iron condor that we took on this particular day. Okay, we needed to be in our purple area to profit, and on the expiration date, the stock was trading right there, which is indeed in the purple area, and therefore the trade ended up with a full profit. Okay, and is not in our account any longer. If you look at Thinkorswim, is not there anymore. Why is it? Well, because the expiration date used was September 24, which has already passed. So therefore, if that's okay, I'm just gonna delete it, knowing that this trade is over. It did work. That's the good news. And then the next one is Twitter, which that one is running right now, and some of you may be in this trade. Please let me know if you are in the Twitter trade in the chat box with a quick amin or something like that. And with Twitter, so far so good. All is looking good as well. So we have this statistical range. Okay, so this is a trade where expiration is much further in time, is October 29. So we got time until October 29. Okay, but in the meantime, notice that the probability range shows that Intel should be trading. Twitter should be trading between this price point and this price point, which is indeed between our UFOs, which basically set our purple area. So in this sense, it's all looking okay, even though, of course, it's been a very strong move on that stock in the past 3 days, going down aggressively. And therefore, when you look at the P&L, even though we have accumulated plenty of time decay. So you can see the net PNL is $3 negative. So in other words, we're not making money yet, even though we have accumulated like a full week of time decay. Why? Because the stock has moved strongly away from where it was when we entered the trade, which is, you know, the normal thing. Again, if I was to be just a bit more visual, for the ones of you that are in learning stages when it comes to iron condors, so you understand how these little animals work. So if you look at the risk graph, okay, and I'm gonna play with the date. So the dotted line here on the risk graph represents today, right? And of course, this horizontal line represents 0, meaning above that line you profit, below that line you lose, meaning the green area is where you profit, meaning the red area is where you lose. So what happens to the dotted line? Well, when time passes, so I am fast forwarding the dates, as time passes, notice that the dotted line is now inside the green space, and on expiration, actually, the dotted line becomes the square line above the risk profile, right? So in other words, you know, we are in the range, we are doing the right thing, and it's all good. We are just waiting for time to pass, okay, to accumulate more time decay. And so far, no risk, you know, out there with Twitter, okay? So that's it, okay? So I am done with the planning and the analysis of these trades, and sorry, not the analysis, the review of these trades, I meant to say, and therefore I am now ready to plan and analyze new trades. That's what I meant to say, to get into new opportunities in the market. Okay, so today I was a bit more efficient than yesterday. Okay. Christian, you're in Twitter. Joe, you are. Maka, you are. Siderman, you are. Very good. Perfect. I love it, guys. And by the way, for the ones of you that are new and you're like, oh, but I don't feel fully comfortable with getting into options trades yet, for sure, don't do it if you're not comfortable. That's when you want to use a paper money account. It's not the same, but it will be a very, very good practice for you to start building up that confidence, okay? So don't just watch it, okay? If you are not ready to trade live, don't trade live, but practice those trades in a demo account. This is a suggestion I would like to share with you guys. Or even if you don't want to use a demo account, you know, with Top, you can use the position panel, okay? And, you know, now you get here your real-time P&Ls, right? So if I look at Twitter, so it shows negative 3.5. This is real time, because while the entry values in this column are set manually by you, the bid and the ask values from these two other columns are real-time values. Therefore, those P&Ls are real-time P&Ls. So it's like you are simulating in an account without simulating it. So that's another alternative on how to do it, even though I would recommend you to click the button and place the orders, okay? Because that way you also practice order placement, because then the day you are ready with confidence to trade options, then you may make mistakes with order placement. So, you know, I guess it's a good thing to do it. And the best recommendation really would be to do both, to simulate it on the My Position panel, as well as execute the trades in a demo account if you are in those earlier stages in your learning, okay? So don't rush it, but don't watch it from the sidelines, okay? That's basically what I'm trying to say. So I'm gonna take a sip of water and we begin, guys. Thank you for that. Anyway, so let's begin. And again, today, the idea is to look for non-directional trades, okay? So when looking for non-directional trades, there are a series of criteria that I need to find in my scanning process in order to make those trades as powerful as possible. So first thing when selling options is that you want the options to be expensive, right? So I'm just gonna go for advanced option scan, and we're gonna look at CIV mean greater than 80. Okay, so this is technique number one to find expensive options. Then of course, when I look down, I got minimum price for the stocks. I got US stocks. You can use stocks and ETFs. Again, I'm gonna stick with stocks. Normally, you have more juice, if you wish, in those options for stocks. You also have often less liquidity, so it's a balance act, if you wish. And I could understand if you have different preferences, it's okay, but the process will be the same if you want to add ETFs, okay? Stock filters, I'm going to disable everything. Okay, so we are disabling stocks and rotation and everything else because we are not looking for a directional move. We are looking for non-directional. On the scan list, I'm going to import the penny increment options, okay, which you could go with the whole US market list, no problem, even though with penny increment options, you should be able to negotiate your entry prices better. And then from a strength point of view, I'm going to select daily strength to be neutral and weekly strength to be neutral. From an earnings point of view, I will want at least 10 days with no earnings, so exclude the next 10 days. Price range nothing, and auto climate nothing as well. And with that, we'll scan. And this is the list that we have to get started with our analysis. Okay, so let's begin. We got November 11. Today it's end of September. So November 11, October 15, October 27, October 14, October 13. Yeah, multiple choices there. If we start with November 11, to be honest, this is a very long trade. So if that's okay, I'll start with the next one in mind in line, which is CAT. Okay, and see if that works. Okay, and also I'm looking at the price points: $53 per share, 47 and 47, and then Visa is 225. So I would prefer 225. But anyway, so let's look at all and let's see what we've got. So CAT is not so liquid. Okay, how do we know that? Okay, you guys tell me, how do I know it's not so liquid? How are you, Gary? Good to see you, my friend. How do I know, without even looking at the option chain or anything, that stock is not so liquid, even though it's in my list of penny increment options? How can that be? Anyone? I'll take another sip of water, if that's okay. No answers? Okay, so again, I wanna help you teach your eye somehow to save time when you plan the trades. Okay, so take a look. If I look at applied materials and I look at the chart, okay, how many vertical lines you see here, right? Knowing that those vertical lines represent expiration dates. And if I look at the next one, that was CAT, how many vertical lines do you see? Only 2. Okay, which means that those are monthly expiration dates. There are no weekly expiration dates. And because there are no weekly, typically you're going to be lacking on a little bit of liquidity. So again, can we look into it and maybe there is liquidity and we will trade? Yes. But again, in order to save time, I'm just going to go for the next symbol because probably it's going to be a better choice. So I'm going to look at Visa as the next choice. Okay, I'm going to look at Visa as the next choice. And here you can see, plenty of expiration dates. Funnily enough, some expiration dates are not so liquid with Visa, even though it's a very relevant company. I know this just out of experience of trading those options. But some other expiration dates are okay. Okay, so we're going to do our analysis. Okay, we are going to do our analysis. And again, the first thing we need to know is when are the earnings? So the earnings are happening on 10/27, meaning that if we do an hour encounter on Visa, the further away we can go is 10/22. Okay, so October 22nd is the furthest away date for us to use for the Aaron Condor, because if we use something after that, then earnings gets in the way, and that's a big problem. So we're gonna go for October 22nd, and in that sense, I'm gonna launch the spread builder, spread select, I should say. I'm gonna float it and maximize it. We're doing Visa. We are doing short Iron Condors, and I'm going to select expiration dates, and what I'm going to select is October 22nd, October 15, and October 8. So I'm going to select any expiration date before October 22nd, including October 22nd, but not after, because then if I use October 29, then earnings get in the way. Okay, so that's my selection for expirations based on what I just said. Joe, the tutorial webinar you are referring to the one on the Sundays? Is that what you're referring to, Joe? Or you are referring to the psychology webinar tomorrow, Friday, with Reynaldo? Let me know, just to make sure I understood. So we got the expirations. The target price, forget about it, is non-directional. So ideally, you want it to stay where it is. Okay, so forget about that price. The target date, forget about it, because I am actually, you can hide and unhide target and expiration columns. In this case, we are calculating reward and risk all the way to the expiration date, and therefore, in the case of an iron condor, that's what's called the maximum profits. Okay, so we don't need to set a target date either. Starting strike, by automatically the platform will place the at the money strike right there for you, so that's what you want. Direction up and down, indeed, because we need calls and puts above and below price. And then we're gonna be working on what is the minimum range available and what is the maximum. Maximum, we can go very far. Minimum is 2.5, as you can see. I'm gonna go from 2.5 to 10, as you have seen me do many other things, because if 10 is the difference between strikes, that means that you have a risk of up to $1,000 per trade, which ideally we can find less than $1,000 per trade of risk, but definitely more than that I would not want to assume it, because that's a $200 stock. I mean, if it was to be Amazon, which is a few $1,000s per share, so then yeah, maybe I can go for more than that. But with $200 per share, I would say that's my very, very maximum. Okay. Let me see. Yes. Wonderful. Great. Perfect. I'm just reading you guys, Siderman, Joanne, and Joe. Wonderful. Thank you, guys. So what else to do now? Okay. Well, we are just gonna activate our filter. We're gonna select the template with Iron Condor and click OK. Okay, and now that we got the Iron Condor preferred parameters activated, so I'm just gonna build 99 spreads. Okay, and and then I'm gonna go ahead and sort the filter column for fail or pass and see what we've got. Okay, so it seems that with October 8, we got a bunch of pass, but and therefore now we're gonna focus on the break-even points. Okay, and on October 8, which is here. On October 8, you can see break-evens are 234 and 216. Okay, those are the more extreme. The red is the more extreme. It could be the blue, but in this case, it's the red. So 234 and 216. Those are the values I want to keep in mind. And here we got 230, 230, 231, 233, 233.59, almost 235. That would be okay. Okay, 235, that would be okay. But then on the bottom part, I said it was 216, right? And this is 235, 219. So it's not 216, so it's not good. And then from October 8, we move into October 15. Okay, so in other words, October 8 is not doing enough for us from a premium point of view. And therefore, I'm going to recalculate all of this using October 15. Okay, and filter again and see what October 15 is capable of giving us. Okay, so we got multiple passes on the right, as you can see. So October 15, let's move here. So with October 15, the statistical range should be 238 to 212. So 238 to 212, we got 233, 233, 235, 235, 231, and I'm looking down, and now we are getting into October 22nd, and nothing was matching what we need. Okay, so not enough premium at this moment in time with October 15. So we only got one shot left, which is October 22nd. So let's see if October 22nd would do. Okay, so I am now leaving only October 22nd and restarting with my calculations here. Now we got 3 passes, okay, which are not gonna work. 236, 236, 236. That's not gonna work because October 22nd requires 240 and 210, and the most we got is 236. Okay, so doesn't work. Okay. Siderman, you don't have the box high target to expression. This is something we added recently. You don't have it? Are you sure you don't have it? We added that a week or two ago. It shows you more or less column just to simplify your view. Yeah, so if, let me know if you don't have it, okay? Because maybe we made a mistake and we developed it, but we didn't push it, so you guys have it, okay? Because this, we need to turn on a switch on our end for you to have it, so it's that simple. Anyway, so Visa is not gonna work for an Iron Condor, and therefore we're gonna move into the next one, which is Walgreen Boots Alliance. And let's see what we can do with that stock. So again, earning in this case is happening on October 14. So here there is only one choice, which is use October 8. Okay, so this is a 1 week expiration date, a 1 week type of Iron Condor. Okay, so Walgreens. So you guys don't have it. So then, my friends, it is my bad. Okay, because of course, because we are doing the developments, I test many things, and I guess that you guys don't have it activated yet. Okay, so I'll be working on that, guys. You don't need to do anything. You won't need to download and reinstall. It will just show up. Okay, when we do that. Okay, so apologize for that. We are working on more tools, to be honest. Okay, so yeah, I guess. My bad, I got confused there. I thought we did it. So sorry for that. In any case, we are now looking at Walgreen. So we're gonna be looking at October 8. We're gonna be looking at minimum is 1. Okay, and that stock is $47. So I would say maximum 5, but I will not go beyond 5. Okay, and with that, we're gonna create 99, and then we are going to filter those trades, and it seems that nothing passes. Okay, nothing passes. Yeah, nothing passes, so no trade with Walgreen. Next one, surprising really, because it was looking like, you know, a pretty interesting amount of implied volatility on the VIX, but I guess it's not every stock, especially that stock is falling 1.8%. I was expecting to get more premium, but I guess it's not the case. So WFC, now that one I expected to not to work too well, because it's a financial stock and often they don't have that much premium built in. So 1013 is earnings. We also need to use 1008. Let's try anyway, because you know sometimes you get a surprise. Okay, so Walgreen, we go for 1 to 5, and we build 99, and then we sort, and also nothing passes. Okay, yeah, so this is not good, and therefore we are not going to take it. So now we're going to continue with our filtering, switching to a different way on how to get expensive options. Okay, we use the technique mean greater than 80. Second technique for us to use is mean minus historic above 2 standard deviations. So we're gonna do that, and let's see what we get. Now we got a bunch of additional stocks that hopefully with this alternative method on how to find volatility, we may get more premium. I mean, and again, when you look at WFC, I mean, indeed, implied volatility, it's in the 80 percentile. You can see it's high. Okay, but again, being a financial stock, I guess it's not providing enough. That's why the filter didn't pass. Okay, so all the methods that we use to identify volatility make sense. Okay, but sometimes, depending on the nature of the stock, you may get a go or you may get a no go. Okay, UPS. So let's take a look at UPS. Okay, we got earnings happening on 10/27, so then we can use up to 10/22. Let me delete lines for this symbol, so we start fresh. So UPS, all the way to 822. So I selected 22, 15, and 8. Okay. And we are going to be building trades. This is a $186 stock. So from 2.5, I'll go up to 10. And we're going to build 99. And as we do that, we are now going to filter and see what we've got. Good. So we got a few passes there. October 8, it's actually 3. Okay. With 193 being the greatest. Okay. So let's take a look at October 8. 194 is what we need, and we got 193. So October 8 doesn't have enough premium. So we're going to disable or uncheck, I should say, October 8. And now we are exploring what if we do the Iron Condor with October 15 or October 22nd. We have a bunch of passes with October 15, many actually. So what number do we need to achieve to accept the trade? October 15 is here. And the numbers, okay, on October 15 would be 197 and 174. Okay, 197 and 174. So let's take a look. 197, 197. So far we don't. 196. 196. 197, right there. Okay, so 197. Okay, 197.89. Oh, sorry guys, I'm looking at this and I'm like, that cannot be. Yeah, of course, I am in the fell section. So yeah, it doesn't work. Okay, so October 15 does not provide what we need. So then we're gonna give it the last shot, which is October 22nd. Okay, and now we are rebuilding it with October 22nd, and we're gonna see if that one works. And October 22nd doesn't work at all. Okay, it's all fell. Okay, so next one, matrix. Let me float it. It's so much more convenient if I float it. So we're gonna look at JD. Okay, so looking at JD, earning. Notice on JD, for example, historic volatility, the blue is beyond the red. Okay, so it's a different setup here. So earnings on 11.15. So we can go as far as 11.12. Okay, so we have many days there for our calculation. So let's take a look with JD. Okay, and we're gonna do the same. So we are looking at all the way, I said November 12th, isn't it? So I'm check marking everything all the way to November 12th. Let me make sure I did not make a mistake there. So November 12th, correct, I did it right. So this is a $72 stock, so I would like to go from 1 to 5. Okay, no more than 5. And all is properly selected, so I'm gonna create 99 of the spreads, update, and then go ahead and filter out. Got a bunch of passes with October 8, yes. So again, what is the top and the bottom of the statistical range on October 8? So I just moved to October 7. Here we go. Oh, I just move again. Okay, now I got it. So we got 78 and 66. Okay, you guys are being a bit quiet. Feel free to ask questions. Fernando, does stop allow us to filter based on the minimum premium we set up? Yes, it is actually set up this way already on the filter. If you look at my filtering condition, I have it set as a template. It says minimum 35 cents. So it's there. Okay. Maka, why not just scroll down and look at other expiration dates? Why is it necessary to recalculate? Because I'm building 99 at a time, and also because to avoid mistakes, at least it works better for me. So if the platform will sort the dates. Okay, so putting on the side that the filters that don't pass are going to be in the bottom, all the filters that pass are going to be sorted based on the date. So if I go down, you can see October 8, October 8, October 8, then October 15, October 22nd. And then when you get back to October 8, okay, or November 5 in this case, October 29, November 5, and then you get back to October 8 here, notice that now is because the filter fails. Okay, so in other words, for everything that passes, it's sorted by dates. And I kind of prefer to kind of analyze it like one date at a time. So that way I know what I need to check is what's on the top of the screen. So I don't need to be moving up and down just to make sure my dates are right. You know what I mean? It's kind of like the way it's more convenient for me. But as a user, you may have another way on how to, you may have a different preference, and it's fine, okay? So what you said is right, Maka. I'm just saying it's more convenient for me like that. I switch back from 1 to 99, Christian, just to kind of like force a recalculation and make sure that when I sort the column filter, it's been recalculated based on the new settings I have selected. Okay, because if not, the recalculations take place automatically, even when you click the update. You may not have a forced recalculation because it depends if or not any of those options have traded, and an update, a tick took place somewhere for all of this to recalculate. So one way to force recalculation for everything is to change the selection of strikes, okay, from 1 to 99. And, you know, again, it's again a mechanical way to make sure I didn't leave anything, I didn't leave any stone unturned, if you wish. Maybe there is a combination of strikes that pass the filter, and if I didn't do a proper update, maybe I miss it. Okay, so that's what I'm doing. Good. So wonderful. So we got we are looking at October 8 exactly. So we got all of this sorted, right? Yes. So now October 8 with JD was 78 and 66. Okay, 78 and 66. So we got 76, 77, 76, 77, 77, 78. I got one here. 78. Yep. 78. And the bottom part we said is 66. So this is 78 and 66. So that would pass. 78 and 67 would not. 78 and 67 would not. 78 and 67 would not. 78 and 63 would. Oh, that's October 16. That's October 15. So that doesn't pass. So the one that passes is 78 and 66. That's the one that passes. So I'm just going to right click and open a risk graph. And this is the trade that we are assessing at this moment in time. Okay, so that's the trade that we want to work with, here. So yeah, so break even 78 and 66. Again, double check one more time. Break evens 78 and 66. That's correct. So perfect. So this trade with JD, it's valid. Okay, and from a risk point of view, we got strike price increments of $1. So the risk is 100. So we are willing to collect 15% of the raw risk, which is 15 cents, and this trade pays 24. So the trade is valid. The trade is to be taken based on all those parameters. But of course, before we get too excited, we now need to confirm we got the UFOs in the right place. Okay, because this is what really, beyond statistics, what will keep the price trading within a range, or at least keep the price longer in the range, is the UFOs. So then we're gonna have to double check that the setup is confirmed with the UFOs. And to do that, I'm just gonna move here. You know what, guys? I just made a mistake out of muscle memory. I was looking at the red value, which is 78 and 66. But to be honest, the extreme here, it's 79 and 65. That's the extreme. It's not 78 and 66. Kind of like muscle memory, because it's almost always this case. And I was just coming from a prior case like that. So I made a little mistake there. So this trade is actually not valid, because the break-even points, if I bring top here again, is 78 and 66, and I need it to be 79 and 65. That was not available on October 8. Okay, so we're gonna continue working. We just need to work a bit more. I almost made a mistake there. So no October 8. Okay, no October 8. Go back to 99 and sort, and let's see if October 15 does it. Typically, I would expect a monthly expression to have less premium built in compared to a weekly expression. So I would be less confident that October 15 will work. But let's take a look. So with October 15, which is here, we are looking at 81 and 63. That's what we're looking at. Okay, the dark blue line in this case is the extreme case. Okay, so 81 and 63. So do we have 81? We have 81 and 65. We got 82 and 65. I went too far. Sorry, guys. We got 81 and 65, 82 and 65. And then we move into October 22nd. Okay. So yeah, so doesn't work. So we're gonna move now into October 22nd. Do it again. Sort. Okay. And from there, let's take a look at October 22nd. So now we are talking about 83 and 61. So let's see if we got that. So 83, we don't get it. October 27, we don't. We only have two that pass. So we're gonna move to October 29. Well, this is quite disappointing, to be honest, especially with the VIX at the level it was. I was indeed expecting to find a trade way quicker, but it's not the case. So we're gonna have to respect that, isn't it? And when you look at October 29 and even November 5, we got 80, 81. So none of this is gonna work. Okay, so yeah, so we're gonna have to go for the next stock, which is F5 networks. So we're gonna look at this one, earnings on October 25. Let's take a look. So October 25 is earnings. So we're gonna be looking at October 22nd as the expiration date. Okay, so October 22nd, FFIV. We are looking at October 22nd, 15 and 8. Okay, October 27, 15 and 8. I did it right. Here we go. And now we start again. So that stock is 200 bucks. The minimum is 2.5. It's 200 bucks, so I'm gonna go for 10. And we start with 99. Okay, so we are just gonna go and sort based on the filtering column. And we are talking about October 8. We have a few cases of October 8. Okay, so let's take a look at what is expected with October 8. Right there, it's 210 and 189 with October 8. Okay, so 210 and 189. So we are looking at something a bit too good to be true. 223, 176. Let's take a look at this. Okay, there are missing quotes here. Missing quotes, missing quotes, missing quotes. I'm not gonna trust October 8, my friends. So I'm gonna uncheck October 8, missing quotes. Not happy with October 15. Looks like it's a different story. So let's build 99 and let's start again. So with October 15, we have a few cases there. So what is the number we are looking for with October 15? So with October 15, we are looking at 213, 214, 185. Okay, so 214, we got 214 and 185, and that's 115. Okay, 455% return on investment. That's crazy. And the reason why it's crazy is because we got missing quotes again. So yeah, I'm really not happy about what I see here, guys. Really not happy. Major lack of liquidity here for missing quotes to, that means that the bid size is 0. Okay, the bid cannot be 0, but when the bid size is 0, then it shows as empty, right? So meaning that there is no intention. Okay, now when the price gets closer, maybe the market makers will step in, but there is no intention right now to get into the other side of those trades. Okay, so major sign of potential lack of liquidity. So we're gonna look at Seagate. I guess I was thinking of the TV show with the Egyptians. Sorry for that. But anyway, so earnings is on 10/28. So we're gonna be using 10/22. Same story. Red line is the one beyond the blue lines. So STX, same set of time frames, 22nd, 15, and 8. This is a stock trading at $83. So I want to go from 1 to 5. And with that, we'll build 99 spreads and we will sort. Okay, and now this is looking much more proper. And then we're going to be looking at what's expected for October 8, which is 88 and 77. Okay, 88 and 77. So we got 86, 87, 86, 88, 88 here, but that's October 15. Okay, so almost with October 8, but it's not. And we are doing it again with October 15 and October 22nd. And let's see what's expected for October 15, which is here. It's 90 and 75. Okay, so 90 and 75. So we got 90 here and 73. So that looks like, oh, wait a minute. This is October 22nd. Okay, October 22nd. That's kind of like why Maca, I organize it like that, because that way, you know, it's kind of like I'm treating each expression date separately. Okay, and you could even go to the extreme and leave only one each time. But yeah, so that's kind of like my muscle memory. Okay, so building again the trades using October 22nd. Here we go, I got it right. So let's take a look at October 22nd and what's expected. The expectation would be 92 to 73. Okay, so 92, we got 90, 94. Okay, 94 is good. It's good to 73, that's 75. 92 to 76, 93, 76, 95, 76, and then it fails. Okay, so it seems that the upper side we find a way, but not the bottom side. So we are not reaching. We are not reaching. I saw it right. 73. Yes, we are not reaching 73. Yeah, we're not. Very close. And I have to say it again. I'm really surprised. You know, with the VIX having been higher, that it seems that a lot of calm is kicking in, and many of those options contracts are losing a lot of premium. So Boeing, let's take a look. Delete these lines that we don't need. So earnings for Boeing are happening on the 22nd. So we are shooting for the 20s on the 27th. So we are shooting for the 22nd. So same setup as before. So let's load Boeing. And let's load 8, 15, and 22nd. So Boeing is a $220 stock. So I'm going to go from the minimum 2.5 to 10. I still have my filter selected. Okay, I didn't mention it because, you know, it's right there. Aaron Condor preferred parameters. But if you ever get confused if your filter, if your template is selected or not, you basically need to look here and you would see it. Okay, and then we're going to build 99 and sort. And everything fails with Boeing. Okay. Did I get this properly updated? I'm really surprised. Okay. Okay, I guess that was still being loaded. Okay. Yeah, I'm like, that's surprising. Anyway, so with October 8, we are talking about the red line is the one beyond the blue lines. We are talking about 235 to 208. So 235 to 208, we got 238 to 212. Now it's failed, so that doesn't work. 238, 238, 238, 238, 238, no 238. Many passes. Now we move into October 15. Okay, so let's go ahead and check October 15. Here we go. And let's sort. Let's see what we got with October 15. The top is 240, from 240 to 202. So let's find out if we got 240s, 235. Again, with the monthly expression date, I always expect a bit less premium. We're looking at 240, no 240. 237 is the most so far, 238, 239, 241. So we got 241 here. Okay, that works. And then the bottom part is 202. So we got 241, 206. Okay, so that is too high. It needs to be 202. So 241, 202. 241, 208. 241, 190 something. But wait a minute, this is October 22nd. Okay, so we got very, very close now with the October 15, but it didn't work. So let's see if the October 22nd will work. And if not, we can just, laugh a little bit about it today, because this is really not so common. Okay, now with October 22nd, notice that our minimum is 5. Okay, that's our minimum. There is nothing which is 2.5. So we're gonna have to go with that. So 99. And I'm just gonna sort. And now let's take a look at October 22nd. Where is that at? So that would be 244 to 199. Okay, 244, 199. So we are looking at 244, 244. We got 246, but it's not 199. It's 203. And the next one, it's failed. So yeah, so you know what, let's laugh. Okay, I just said it. If we don't get it, so we're just gonna laugh a little bit. So let's use a bit of sense of humor, because it's one of those days where it's surprising. So what's happening with the VIX? Well, it's not so bad. It's 23 something. Yeah. Nice move out of the UFO there, going up. So volatility should be coming in the markets, but then when we run it, it's not the case. Okay, so what this may mean is that the volatility that we are seeing coming in the market in the form of VIX may be impacting much more heavily the at the money strike of the options. And because when we do an Aron Condor, we are going far out. So instead of a volatility smile, we are finding more of a volatility frown. And therefore, those out of the money options, they actually get less premium built in, given how people are trading options at this moment in time. Okay, so that could be the case. Well, that's indeed the case. And it's probably given the fact that the market is moving hard now. So probably many people are just actively buying at the money options just to ride the move, directionally speaking. And there may be more trading of the at the money strikes than other strikes, and therefore the implied volatility is rising on the at the money, but not rising so much away, right? So that's by the way the other reason why we are running different types of methods to assess volatility, because it's not black or white. Okay. So let's run the third method, and we got 2 minutes to go, guys, and hopefully with the third method we're gonna find a trade. So we're going to look at top increase of implied volatility in the last 5 days. Okay. So with that, we got many. So let's try to be a bit picky. So we have earnings on the 18th with IBM. So what about we try IBM? Let's go ahead and try IBM. Okay, let's try IBM and see what we're going to find. So it looks like a lot of premium. Look at the red line is so far away from the blue lines. Okay, hopefully that will help. Okay, let's take a look. I want to type IBM. Hopefully it will work, and if it doesn't, at least they say practice makes perfect. So at least today is a session where now you know the process by heart on how to find an Aron Condor, even though we didn't had a go ahead. So earnings on the 18 as we said. Therefore, we can use up to October 15. Okay, that's the maximum. So we're gonna select that. So October 8 and October 15, but we don't need October 22nd. Okay, 100 plus dollar stock. So I would like to go from 1 to 5. And everything is set up. Very good. So 99. Let's build those spreads and let's sort the filtering conditions. So October 8 is sorted here. So let's find out, what is expected for October 8. What's expected is 146 to 132. Okay, that is what is expected, 146 to 142. So let's see if we got 146. We don't have 146 so far. We don't have 146 so far. We don't have 146. We have 145.66. Okay, I could accept that. What is the bottom part? 132. That's 134. That I will not accept. So still October 8. 146, 135. 146, 135. Yeah, we don't have it. 145, 127, but that's October 15. Okay. So last chance, guys, before we conclude the session today. Last chance is to check October 15 and find out more about if it worked or it didn't. So October 15 requires 149 to 129. Sorry, 148. Well, yeah, it's 149. 149 to 129. So let's see if we get 149s here. So far, we don't. Wow. 149. 147.6. Yeah, we don't have it, my friends. We don't have it. So what a day. What a day. We went through many chart examples and so on, and we didn't find what we needed. So yeah, I guess it's what it is today. Yeah, thank you. I very appreciated, Christian, that you said practicing is good for me. I really appreciate you there very, very much. And on top of that, what you said is true. Practicing is indeed the way to learn and to master it. At the same time, we meet twice a week. Well, starting next week, we'll meet on the Sundays too. It's 3 times a week. But I really love to get those trades because then it gives us the opportunity to talk about things that are, important when it comes to management and so on. Of course, the boss is not me. The boss is the market. So if the market is not giving it to us, hey, that's it. We're just gonna have to be respectful of that and still have a smile on our face. And just like if you went fishing and you didn't catch anything today, so then you didn't, and that's it. But it's not like the ocean was against you. So same thing. So we'll be peaceful about it. We'll have a smile on our face. We tried, okay, as you said, Joanne. But I mean, me, and sometimes I phrase it very clearly that it's kind of one of the most frustrating things for me as a trader is not when I trade, is actually when I coach you guys and I want to put something in place so I can help you better, and that the market is not collaborating. So that is a bit in the frustrating side, if it's okay for me to use that slightly strong word. But putting that on the side, this is part of trading, my friends. And to be honest, this is a good lesson to see that we went through multiple setups and we got no every time. And you just need to go enjoy your day and have a smile on your face instead of getting upset and over trading or forcing a trade that is not to be taken. Okay. So everybody, we just relax and we learn from the experience. Okay. Even though, of course, it's less fun compared to other sessions that we had before. Okay. So thank you for your words, guys, and for understanding, of course, and for being disciplined, because in the end, it's the key for success. Anyway, my friends, thank you so much. I will see you. Um, I will see you on the Sunday, isn't it? With the first top session that we'll do on Sunday. So join me there, guys. We'll be taking things. For sure, it's Sunday. The market is closed, so that day is the day where we won't trade for sure. But that day we'll start getting into aspects of the use of the platform, which are absolutely critical to really master it. And for sure, we'll have side conversations where, as we talk about the technology and the platform and how to use it and how to do certain things, it's unavoidable. We'll get into mini lectures when it comes to options trading, because you cannot separate trading with the use of a trading tool. It goes together, it goes hand in hand. So I am eager because I think those sessions are going to be quite fun, to be honest, even though we won't execute. But certainly from a learning point of view, it's going to be great. And by the way, this is going to also help in the following weeks in the live trading sessions like today, where I will be able to spend a bit less time with mixing trading and lecture and be a bit more direct to the trading, because we will have lecture sessions on the Sundays. Okay, so looking forward to seeing you there, and you guys keep up the good work. And thank you for joining me, guys. And it's a special time for me in the week when we get together. So thanks for being part of this, and see you in the next one. Bye bye, everybody. Take care.